Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So today we're going to go into the overall portfolio value, take a look to see if there are any deals within the portfolio, take a look at how it's performed, the individual stocks, see if there are any deals and any dividends coming up, as well as we're going to take a look at our watch list and see if anything is at a fair price for us to purchase. So jumping in for today, we're up about $69, 1.4% or 0.14%. That 1 week mark, we're up $9.53 with a near 2% return. 1 month mark, we're down $1,000. Keep in mind I did take money out, so it's going to say negative for a while, but I'm down 2%. 3 month mark, we're up $693, 1.4%. Year to date, we're up $713, which keep in mind that's like 6 or 7 days. Yeah. The 1 year mark, we're up $9,000, nearly $9,100, 22% return. All time, up $23,881.70 with a 93% return all time. Buying power sitting at $210.75. That is because of the dividends that we got paid last month, which was T. Rowe Price and Realty Income, as well as Visa. And then starting off the portfolio with Altria, 5280, we have 320 shares, $16,893 worth of market value. Average cost is $47.27. 34% of the portfolio is in Altria. Today we're down $112. Total we're up $1,700 with an around 11.7% return. Dividend coming in, I believe on Friday, of $326.40. Not sure exactly where I want to put that right now. There are some deals, but the stock that I really wanted to buy before the end of the year was Apple, but it is above my average cost. I feel like I'm willing to just bite the bullet and buy more Apple, but I would get a pretty significant bump in dividend income if I just reinvested it back into Altria, like that complete $560. So we'll see how I'm feeling when Friday comes. I'm most likely going to buy a share of Apple because I've been wanting to for quite some time to get 10 shares. Let's make it a nice even round number. But if I do buy that share of Apple, then I still have around $300 left to invest. And with that, I might put it back into Altria. We'll see. Then Coca-Cola is at $61.36, 15 shares, $920 of market value. Average cost is $60.54. 1.8% of the portfolio is on Coca-Cola. Today we're down $5. Total we're up $12 with a 1.37% return. So Coca-Cola is near my average cost, so I would be purchasing it here. My cutoff would be about $64 to $65 per share. So a good buying opportunity for Coca-Cola for me personally here. But I would much rather buy Apple as of right now. Higher growth, and I think a lot more potential upside for the stock versus Coca-Cola, but I do want to get Coca-Cola to 100 shares eventually. Then, of course, we've got Apple, $246.41, one of my personal favorite stocks. 9 shares, $2,200 of market value. Average cost is right around $220 per share. 4.5% of the portfolio is in Apple. Today we're up $27. Total we're up $262 with a 13.4% return. Again, guys, I know I'm up pretty big here on Apple, but I do want to purchase at least one more share. Honestly, I missed the boat on Apple. I guess anybody born in the 90s could say that, but I joke with my mom. I watched the Steve Jobs, the Ashton Kutcher, Steve Jobs biopic. And I always pick on her that she didn't buy Apple when she was like 2 or 3 years old because we'd be millionaires. So, I do plan on buying a lot more Apple. I want it to be the single biggest position, and for that to happen, I need to purchase the stock. But the flip side on that is if I buy it at too high of a cost, then it's not going to give me a good value return. So I'm not going to get a good value for my money, and there might be better places to put Apple. At $220, it seemed like a fair value to me. At $240, I still think it is fairly valued. I don't think it's super overpriced. The PE ratio is at 40, but it is one of the biggest companies in the entire world. They have such a great product and ecosystem built into the business that I do think that around $250 I'd still purchase it. So my plan as of right now is to buy a share of Apple and have about $300 to put back into like Coca-Cola or possibly T. Rowe Price, or maybe even buy some Realty Income back. There's a lot of options, but it's not a small amount of capital, but it's really not going to move the needle in a $50,000 portfolio. Then we got AbbVie at $181.36, 95 shares, 17K worth of market value. Average cost is around 95 bucks per share. Around 35% of the portfolio is in AbbVie. Today we're up $14. Total up 8,100 with a 90% return. So yeah, this is one of those that's fluctuated, not terribly, but over the past year you can see it has gone down all the way to 154 and all the way up to, I think it was like $200 a share. So it's had like a $60 swing. And then all the way down here, we got it to 166. So we got nearly to the 52-week low again, right away in like November, right around Thanksgiving time. It dropped again. So overall, the sad part for me with AbbVie is my average cost is 95 bucks per share. So even at that like $150 range, I needed to drop another 60 bucks per share. So I needed to drop like another, third of its value for me to purchase anything. So that's another, $60 per share. So that's insane. So I have such a low average cost that it hasn't hit that. I mean, the last time it hit that mark was around when I bought it. But like even the past 5 years, the lowest it's been is like 88 to like 72. So the last time it was even near that mark was October of 2020, so right around COVID when it hit. Since then, we haven't really had that big of a drop. Like, yeah, some of these, like from 170, down to say like 130, that's still like a $40 upside. But for me, that's not even touching my average cost. So if you bought it within the past, like, 3 years, your best mark to buy it at would be like $100, 110 per share. So still another 25 bucks above my average cost. So I just have to be patient. AbbVie may never touch those again. Like it may take a really big economic downfall like the COVID again in order to get the stock at a good price, which is fine. I'm willing to wait. So guys, I have a total return of 90% on the stock price. Plus I'm locked in on that like 5% yield. Right now 3.42, but I got it at 90, so my yield's quite a bit higher. So I locked in like a 5% yield, and it pays me 150 bucks, which is enough to purchase a share of T. Rowe Price. And definitely, as long as it stays below 150, I'm good. I can just keep pouring it into T. Rowe Price. So that's really the long-term strategy is, use Altria to buy Apple, and then use like Coca-Cola to buy, say, AbbVie if it's on sale, or buy like Costco or whatever. Like it's always buy the next set of months with this. So with this set, so Altria is going to buy me a share of Apple, and then probably buy me some more realty income. So my monthly income will go up. So AbbVie is just one of those that I want to buy more. It is one of my my personal best performer, but I think Apple overall has got like a higher and longer growth road ahead of it. Then we got Visa at $315.33. Only got one share because this stinking thing keeps going up. Market value is the price of the stock. Average cost is around $270. 0.5% of the portfolio is in Visa. Today we're at 45 cents total. We're at $47 with a 17.5% return. So I've done really well here on Visa. Biggest regret is not buying more, but I didn't have more to buy at that current time. I used dividends to purchase the single share. So I was limited on my funds at the time, and I still am a little bit. But if it drops down to 270, I'll purchase some more shares. As of right now, I'm good on that return, just sitting and waiting. And then we got T. Rowe Price at $115.86. We got 101 shares, $11,700 of market value. Average cost is right around $110 per share, so I'm up a little bit here. Around 24% of the portfolio is in T. Rowe Price. Today we're up $117 with a 1% return. Total we're up $625 with a 5.5% return. So guys, this is one of those I'm patiently waiting for. The dividend grows at a smaller rate, but it's still compounding over time. I make about 125 bucks per month, which is enough to purchase, 4 shares of realty income, 4 or 5 shares of realty income, like 4 shares of Coca-Cola, or 4 or 5 shares of Altria. So T. Rowe Price does its job really well. It uses its dividend income to buy the next month, and that's the whole strategy here. Is regardless of when I get paid and what I get paid in dividends, I'm constantly building my income for the next month. And the beautiful part about the strategy is, and the way it works, is because I haven't had to put in fact, I've taken money out of the portfolio, but I haven't put a single dime into the portfolio outside of dividends for over a year now. So the strategy does work. I mean, dividends will buy you more shares and then keep compounding. And once we get the last couple debts paid off, I'll be putting more cash into the portfolio. Hopefully around 500 a week, or excuse me, 500 a month. 500 a week would be like my whole income, but 500 a month, and I'll be able to purchase, that would be like 10 shares of Realty Income. That would be around, 10 shares of Altria. That'd be two shares of Apple, or nearly 4 shares of T. Rowe Price, or 1 or 2 shares with dividends of Visa. So once I get back on track with depositing money into the account again, it's going to really start compounding, and I'm excited to see what deals we can really take advantage of. Part of why I've been waiting to purchase stocks because the prices have not been that low. The overall return that you get is based upon the price that you buy the stock at. So as of right now, I'm not touching Altria. As of right now, Coca-Cola seems like an okay buy, but it's not below my average cost. So from here, my overall return goes down as the price goes up. Same thing with Apple. I can buy it here, but I'm actually deteriorating my overall return if I'm buying it at a higher price. Same thing with AbbVie. I'm not going to touch it here because it's double my stock price nearly. So it's like I'm going to get a lower overall return on what I currently have. Now, something like Visa, I'm okay with that because I only have 1 share. So it's like if I have, if I can put $500 a month in eventually, I could buy a share and just dollar cost average. So Visa's kind of in a better spot than something like AbbVie and Altria right now too, because they're higher than my average cost. So if I buy more at a higher inflated price, my overall return on the stock is going to go down, even if the dividend income goes up. So my main focus is dividend income, but just because I want AbbVie's dividend income to grow does not mean I'm going to buy it at a 90% markup. So I do have a couple deals within the portfolio that I'd happily jump into. Like Coca-Cola's a good price right now. Altria is a great price right now. But when it comes to my second set of months, like from a price perspective, I wouldn't touch Apple or AbbVie. Now, I do want to buy a single share of Apple because my goal for the end of the year, for around Christmas, was to purchase a single share, which I do have the cash to do. I just want to do it with dividends, so I'm waiting on that Altria dividend. And then for the watch list, as of right now, we've got Realty Income. I do plan on buying it back. My goal was around 200 shares. I had 170 before, so a little bit of a bump up from where dividend income was at. It should pay me around, say, like $50 a month, which will help because it pays every single month. So even on those months that say like Apple is at 250 or Altria is still at 180 and I can't purchase anything on that second set of months, it won't boost up that singular month. So it won't make it surpass like the Altria payment or anything like that, but it will boost up that month's income because everything goes up. So for me, this is one of those that's a really good alternative for if I have nothing in the portfolio that is lower than my average cost, I can always buy some Realty Income. And we got Costco. I want to buy this because honestly, they're super dominant. I do like that management is very good with capital allocation. That's one of the most important things as an investor is you can determine that a company or a stock or business overall is a great investment. But even if you figure that out, that it's a good value, a good buy, it doesn't really pay off unless you can trust management with your money, right? If you can trust management with your funds. So it's like Apple could be the greatest business in the world, but if an idiot is running it, I mean, it'll still probably perform pretty well. But if they're not good stewards of your capital, then they're just going to burn your money away, right? So you don't want to give your money to, and it happens, right? So like look at like Intel, they just had a huge restructuring of their business. For the past like 10, 15 years, they've been a decent investment, but now they're garbage because they destroyed shareholder value and now they're having to reset the company. Comparing something like Costco, where they had extra capital this past year and they paid out a special dividend, and a lot of people were ticked about it, but if you look at it from a shareholder perspective, they could have held on to the money, which would have been fine. But if they can't honestly find a good way to get a good return on the capital that they're holding, they might as well give it to shareholders because it's not doing any good. It's not bringing them any value in the business. They said that they could build more warehouses, but if they don't do it at a good value that's going to get them a good overall return on the money invested into the warehouse, it's going to take longer to actually get value out of that placement for shareholders. So at that point, which I think that's what you want from management, is you want a management team that is competent enough to say, you know what, we could build 20 warehouses at Costco this year, but if our return on investment's only going to be 6% on each one, and we can give the shareholders a return of 12% this year off of a dividend, their overall, like, if we can only build 2 and we get 5 to 6% on each, we might as well just give them that capital, because there's also the time value of money. They have to build it, they have to pay people, they have to have contractors, they have to find the land, all that other stuff that goes into building it, and building the location. They decided, you know what, it's better to just give them, the money is more valuable to shareholders given to them right now than if we decide to build any more Costco warehouses, which is exactly what you want. As a shareholder, you want them to be competent enough to say, you know what, right now is not the best time to reinvest into the business. We're going to just give it to shareholders as a thank you for being loyal and holding our stock. There's nothing wrong with that. And in fact, that's how you want it to be. I would much rather own a Costco than something like an Intel that they've had to reshape their whole business. So I do like the business model of Costco. It's a lot like Sam's Club, which I actually talked about owning Sam's Club in a couple videos in the past, but I don't want to own Walmart. I just would want to own the Sam's Club arm of that business, which is not possible. So that's the best way to get a company like Sam's Club, would be Costco. Next up, we got Google. So guys, I watch YouTube videos constantly. I use Google search every day, as do millions of Americans. Plus they've got cloud, they've got Drive, they've got AI, like they've got so much growth potential in the future. For me, honestly, I'm good with just the YouTube business, so everything on top of that is just extra for me. So I owned like 3 shares of this in 2024, and I sold it like an idiot. So I'm going to be purchasing it relatively soon. It is at a nearly half the PE of Apple right now. So the other one I was looking at is Meta, but I'd rather own Google than Facebook and Instagram. So overall, I do want Google to be a top 5 position, and I'm excited to add it and hold it in the portfolio. And then, of course, guys, we got Berkshire Hathaway. This is one of my top 5 favorite companies. I do want it to be one of the top 5 biggest positions in the portfolio. That insurance arm is just insane. The way that they use their free cash flow and buy undervalued businesses and really know how to get the best overall return on their money. Like, they, instead of buying up a bunch of stocks that were overpriced, Buffett decided, screw it, I'm going to put it in treasuries and get a solid 5.5%. Again, just like with Costco, there's nothing wrong with that. Buffett could have went in and bought Apple stock when he felt like it was overvalued just to do something with the money. He could have bought another business that that was a little overpriced, but not as long as shareholders don't really know the value of that business, it doesn't matter, right? Like, he could do whatever he wants with the money, but he truly wants to make the best, most educated decision with the money he has. And as of right now, with Apple being at an elevated price, Bank of America was elevated when he made those decisions. So it's like, I think he's doing the right thing. A lot of people will say, like, you have $250 billion on the sidelines and you're not doing anything. And honestly, at the shareholder meeting, he's like, there's nothing to do. There's nothing that I see that $250 billion that I could put into with this amount of money that is really going to give it a better return than what I can find in treasuries. So he pulled some out of Apple, he put it into treasuries, getting a 5% return without having any risk. So I think Berkshire Hathaway is going to be one of the wisest investments I ever make, because even if Buffett's not at the helm, I have faith that Greg Abel and Ajit Jain are going to be able to be good stewards of capital and truly do what's best for the shareholder. And that, honestly, I think Berkshire is in like the top 1% of companies. Google's like that as well. I feel like Apple's really good at allocating their capital. So it deserves to be in that top 5. So eventually I will be buying a share, and then I'll go to the Berkshire meeting on my own dime. So guys, with that being said, thank you so much for watching. Remember to hit the subscribe button on my channel, that Dividend Guy. And when you do hit subscribe, make sure you like each video that comes out. I'm going to be trying to do 5 videos a week again. I miss posting videos for you guys. So overall, as of right now, Altria and Coca-Cola are good deals. Apple's a bit overpriced for me, but I want to purchase it. And by the end of the year, you can expect realty income to be back in the portfolio. And if I think Google and Berkshire are at a good value, I'll be adding those as well. Costco might take a little bit because that $1,000, like that $925, is kind of a big hump to get over, even when you're, investing $500 a month. So I want to say thank you guys so much for watching. Remember to hit the subscribe button, and I will see you guys tomorrow with another Robinhood portfolio update. Take care.